What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is July 22nd of 2024. Well, folks, I hope you are having a fantastic day wherever you are, because in today's video, I'm here to do a very important update when it comes to both Bitcoin and altcoins within the crypto market. We've seen a lot of strength come back into the market here in the month of July, and this has put not only Bitcoin in a position where if the right steps play out here over the next week or two, we could not only be set up to potentially go on to all-time highs by this year, but beyond that as well, we could see a lot of altcoins really kick off in a broader altcoin cycle, the one in which we've been looking forward to potentially for a long time here in this market. But while I'm going to be talking about the good signs, I'm also going to be talking about some of the worrying signs I'm seeing here and things that need to change and break through to signal that confidence. But beyond all that as well, guys, we had a lot of other topics to discuss. I wanted to dive straight into it, but I want to let you guys know real quick that we also have a new feature that we've added into our videos on the channel. We're trying to do our best as possible to make these videos as accessible to everyone beyond just those who are in the US or native English speakers. So we're adding subtitles and captions for all of our videos. And along with that as well, we're also going to be utilizing AI tools to make voiceovers in native languages. So that feature will roll out slowly over time, where essentially if you like to listen to me ramble, you can listen to me ramble in your preferred language if English is not your predominant language. So just wanted to let you guys know about that. But let's go ahead and kick things off here. So first off, we got to talk about what's happened here so far. July was a really positive month for Bitcoin. It essentially captured the low point, which we've been targeting for some time. And while we keep over the idea that prices could obviously move lower, what we did talk about for the past couple months is that due to this stagnation, we were likely due to go below that 200-day or test relatively close to this mid-range here in mid-February, around $50,000 that was serving as resistance before the secondary wave post the ETF launch. And that's pretty much what we got here. We got capitulative lows here at around the low $53,000 range. And since then, we have swept through those moving averages. And this is not only the trend in both Bitcoin, but also altcoins. Altcoins are up exactly off of the low range we targeted. We nailed the call on the lows for altcoins. And since then, we've bounced up around 38%. But there are some important things to keep in mind here when we're talking about the overall trend for these different areas of the market. First off, when it comes to other coins here, which is really our key focus, we're seeing very clearly here that the 200-day and 100-day are still acting as resistance. This was a prior range of support, at least the 200-day was here, whereas the 100-day was acting as resistance at a much higher range. Now we're at a lower price range, and we've got to actually clear through this range to actually signal the confidence for the broader move. Now, of course, since then, if you bought in at that range we've been talking about for the past couple of months, the capitulative lows, the 50% correction range, which we highlighted from the relative highs, then in that case, it's awesome. You can make those rebound trades, make really quick returns. As we'll take a look at some of the pairs later on. Some of them paid really well, 30, 40, 50% or more within a matter of just a week or two. So again, not many markets out there where you can make those kind of returns and really capture those lows if you can be patient in a very easy way. But beyond all of that, again, it's about getting above the 21-day moving average, making it support and squeezing through those longer-term moving averages, which have started so far to act as resistance over the past few weeks. So keep that in mind here. It's relevant not only for Bitcoin, but also altcoins. And in the case of Bitcoin, which is definitely showing a bit more strength in the broader market, Bitcoin dominance has picked up again. It's imperative that Bitcoin can do the same exact thing we're discussing earlier. As we've cleared through the 100-day and all those longer-term moving averages, that's a great first sign. It's done something that altcoins haven't done yet. But the second step here to really set ourselves up is to make these moving averages support, to come back down into this range and test down around the low or mid $63,000 range where the 21-day pocket's coming up. And when those moving averages align, showcase that those can start acting as support yet again, that they are not going to be acting as resistance like they were throughout the month of June and many times back here during the month of April. It's imperative to keep that in mind, that those moving averages need to start showcasing support for the broader trend. It's not so much about always capturing the absolute lows. Some people might have not bought down here, and that's okay. What we really want to do is have a confirmation. We want to have a confirmation of whether or not the momentum is here, that in altcoins where we're going to be actively trading, there is a surge of liquidity, new stablecoin injections, ETF inflows to Bitcoin that is going to allow for that market order flow to drive prices higher. That's really where the returns are made. That's when the FOMO, the euphoria kicks in, and we can make some really killer returns if we're on the right narratives when it comes to our positions. Now, a couple big things I want to talk about from high-level overview before I dive into the specifics on the more kind of altcoin sector that we're focused on, kind of the small mid-cap plays, a lot of the emerging narratives. I wanted to talk about the ETH-BTC ratio and also talk a little bit about Solana versus Ethereum. I know a lot of people are obviously still optimistic around Ethereum as there's the anticipation of the Ethereum ETFs going to market sometime here in the summer. That's what most people have estimated. Might take a little bit longer. Irrespective of how the SEC rolls this out, it's important to focus here on the price action. And for me personally, when I take a look at the monthly, I zoom out here. I'll even turn off the moving averages just to kind of clean up the chart here a little bit, but we will bring those back on in a moment. I just want you to analyze, we even turn off the drawings here, to some extent, right? We're just gonna hide all, right? The ETH-BTC ratio over the past couple of years, really the last 3 years, has been a general broad decline. And I want to emphasize the significance of this here, because if you are gonna be exposed long to the crypto space, you want to make sure that you're either in Bitcoin, right, which is kind of the safe large cap bet, or you want to be in plays that are outpacing Bitcoin. Now, I'm not saying you can't make some great swing opportunities or short-term scalps or trade setups in the market. Russ is going to help guide you there in that aspect. He's really good at that. If you guys have been in the Dash Report alerts group for some of Russ's alerts, he has been nailing a lot of those calls. He sometimes misses, but at the end of the day, he gets most of his calls right and has been making some really solid returns. One of the best scalpers I've met personally. But at the same time, if you're more like me, if you're kind of focusing on those swing setups, I want to make sure that Ethereum is not just moving up in dollar terms. I want to make sure that it's one of the top performers in the market. I want to make sure that it's at least at a minimum outpacing Bitcoin. And really, since back in October, or if you really can stretch it out here to June of 2022, or here at the beginning of May of 2021 during that euphoric period, Ethereum has been flat against Bitcoin. And that doesn't really excite me so much. So if you're coming to me and kind of wondering, Nick, am I optimistic going into the ETF launch? I got to see some kind of general price appreciation. I got to see that there is a sign of optimism. I got to see at a minimum that this level here is going to hold. That, again, buyers have generally come in here over the past couple months and held, which is a good sign to see for a potential long-term trend reversal. But it is facing a long-term line of resistance that has been held since back in December 2016. As we go into the close of this year, right, we're approaching nearly 7.5 years so far that this has been acting as support in the past. But now, here in February, right, we snapped through here. So it's about 7 years that we held this as a line of support. Now we've broken through it. And it's very likely that even if we get a bump up here, say 20% against Bitcoin, which still could be a great short-term swing opportunity, it's got a lot of heavy resistance here with this line. I usually don't like to just use lines of support and resistance, especially ones that aren't for example, horizontal or more, for example, order blocks or ranges of certain demand within price. But generally speaking, these longer term lines, they hold a lot of significance in my opinion. And I think it's imperative that if you're not looking at those long-term trend lines, right, you'll miss out on the picture of the trend of some of these broader large cap altcoins. And this is the same case for BNB, for a whole range of other legacy plays out there, Cardano, you name it, a lot of those multi-$10 billion, $100 billion plays in the market, XRP as well, they're not looking good in their BTC ratios. And we are below, facing multiple months of resistance. In fact, I would say, while some people might see it as bullish that we've held neutral here, we've actually been treating the 200 week as resistance. So again, I don't want to ramble too much on this. You get my sentiment. We've seen in the past here that the 200 week can hold as resistance for a long time, then it breaks through. And when you get that, that's when you get the majority of your move, right? That's when you can really make the exciting returns. In this case, it's even more true here. There really just isn't much room, I think, for growth here for Ethereum. But even until, maybe even if there is that ability for that growth, we need to have the confirmation sign of momentum, right? And I really take a look here at Solana, right? And to be honest, as you guys know, I've been hesitant on Solana. I don't think at the end of the day, Solana has so much fundamental value, the same as Ethereum. I think there's been really a lack of innovation on both chains, to be completely frank, because mostly just meme coins at this point that are the new tokens being launched, and some dime a dozen projects that aren't really creating much new, copycatting old strategies. But irrespective, we're here to make money, we're here to trade the market, and overall price action here for Solana versus Ethereum it's definitely looking more bullish, right? If we take a look at the SOL BTC ratio to be equal to Ethereum, you'll see that it's coming up, testing up towards those prior all-time highs. And it's also doing the same with Ethereum here, right? And this is really where, again, I would be maybe interested in maybe setting up like a long position, not so much on SOL per se, but it's a lot of meme coins, like things that are going to benefit from a broader appreciation. What we've seen is that generally speaking, when Solana is doing well, for example, back here in March or here in December, right, those kind of 50%, near 50% months against Ethereum, those are when really the liquidity surge is coming into the Solana ecosystem. And Solana does well in itself, but a lot of people recycle those profits and they start speculating on a whole range of different meme coins. And that's where I really think you're going to make your 2, 5, 10x opportunities when that potential breakout happens above this line of resistance that's really held back prices since back in November 2021, the prior all-time highs. So that's where I could see a lot of opportunity. We could watch a lot of the Solana meme coins, not only the large caps like WIF and BONK, which in the case of BONK, I think has a really nice technical setup here for that potential breakout. A lot of people are accumulating at this range in anticipation for that. But beyond all that, in the small and mid caps, the plays where we've made those easy 3, 5, 10x returns in the meme coin space. And that's what's really got me interested. That's when I want to deploy my capital. It's the same exact thing we did back during Q1 where we made some really great returns. I think we could see a repeat of that. It could be just as crazy, if not more crazy. Maybe it's a little bit less. Irrespective, there's not going to be any market out there that's going to give you those kind of returns within such a short window of time. Outside of that as well, outside of just Solana and kind of the ETH versus Solana debate, the topic of meme coins, we also have our other strong narratives. We have the narratives of DePIN or AI related plays, decentralized physical infrastructure networks or AI. We also have as well the topic of Bitcoin and Bitcoin infrastructure. So I wanted to talk about some of those. Render, for example. Render has definitely formulated what looks like for now potentially a double bottom here, a little bit above the kind of mid $5 range, around 570. 570 is kind of the low range here. We were able to get above the 21-day. We're currently testing to see if that 21-day can become support. We are still below those long-term moving averages, still well below the prior highs here, down nearly around 50%. So there's still a great opportunity to scoop these altcoins if they start showing the right signs. Again, we're coming down. We just barely got above that 21-day. We're not even coming up to test that 200-day yet or the 100-day. So we've got to see this hold here, right? We faded the last nearly 2 days worth of gains here. So it's a matter of holding that and showcasing that it can really move higher. Fetch is another great example. Fetch, again, at the end of the day, guys, if you really kind of bought at these capitulative lows when altcoins were coming down to that $180 billion market cap target we talked about, I know some of you guys bought some of these plays, which we've been talking about for a while, and a lot of you made some really great short-term returns. I mean, this thing bounced up 26% in a day back here in June, went up another 7% the next day, even testing towards those lows again. Within a matter of a week, went from $1 and around at $1.10 here towards around $1.50. Great returns on these short-term rebounds, and that's awesome. If you bought those lows, you're taking profits. That's awesome. But for a lot of you here, you're kind of like me. You're someone who's like, okay, yeah, maybe there's some short-term trades. I don't want to be trading too much though. I want to know whether or not it's time to buy those bags, buy my positions, so this can really go on and be able to make a really sizable move, right? This has been our area of interest here for some time. The question is, can we actually go to new all-time highs, retest the prior highs, and get those multiples that we're expecting from altcoin positions, right? And it's all about momentum, guys. So far, Fetch is testing that 21-day. It's had a lot more time above the 21-day than, say, Render. It's testing it right now. I like seeing that. That's a change from how it was using it as resistance over the past few months. But again, it's all about seeing that we can hold on that and get a nice daily close above what has served as resistance, which is about 150. So just 10 cents, right? It doesn't require that much to start really showcasing that the bulls might have some ground here, but they've got to show up to the plate. They've got to be able to really drive price higher. The market has got to show that anticipation. Last but not least here, I want to talk about stacks. Again, another one of my favorite plays here to watch. Again, those long-term moving averages, the 100-day, 200-day, so far acting as resistance. It's all about the battle between the 21-day and the 100 and 200-day moving average. Essentially, the short-term moving averages versus the long-term. If price can come down, make that range support at around 170 on a pullback, right? Nice cool down from $2 to 170, holds at that range for a couple days, scoops back up, and actually starts to have a daily close within these moving averages. That would get me relatively interested in a play for stacks to continue rallying higher, right? Again, great rebound off of the lows. Not everyone can pick the bottom. If you guys did, that's awesome. I would definitely consider taking some profits and then considering a re-entry in the event that it holds in the 21-day and is actually able to charge through those moving averages. It's best sometimes to take chips off the table and even miss a bit of appreciation until you see the signs that it's got the leg up, it's got the setup to be able to actually go on and do big things, okay? So we've talked about a lot of different things here. I think one of the big areas that, again, still a lot of people are going to miss out on this cycle. It's one of the strongest consistent narratives. It's something that I feel is constantly going to always be a subject matter in each bull market. There's always the quest here to essentially build new layer one infrastructure. And I think that while there are different plays out there in the market, you've got definitely established players like Ethereum and Solana. You've also got a whole new range of different plays that are going to serve as new entrants to the market that have not had their heyday yet, that are going to offer a whole new range of value into the crypto space, both from a fundamental perspective, but allowing for a whole range of new applications and value creation to come into crypto. And you guys have heard me mention plays like Radix, you've heard me mention Energy, these plays that are really focused on their own niches and offer new value propositions to the space. But one of them that, again, I think you guys definitely need to keep on your radar is our partner here in this channel, and that's Al0. Now, I wouldn't be partnered with Al0 if I didn't believe in it, guys. I've been following Al0 since back in late 2022. And for me, it's a project in which really has the legs to be able to actually stand up against some of these larger L1s like Solana in the long term. Al0 is focused on being the main privacy L1 when it comes to smart contract applications like automated market makers or other different types of lending and borrowing protocols. So narratives like DeFi, GameFi, any area you can think of, and even traditional finance coming into the broader crypto space. There's a lot of reasons why we have yet to see a lot of enterprise blockchain adoption, traditional finance adoption, and why so far there's been a lot of proof of concepts and early stage adoption of these protocols rather than full-scale implementation. And the reason why is because we need to have these full layers of privacy baked in to the actual L1 and other subsequent L2s that they might be interacting with. You can't be exposing customer funds, for example, for a bank. And along with that as well, you need to have a network which allows for GDPR compliance and other privacy regulations to be intact when interacting with these chains and conducting certain types of activities with data and user funds. So this is, again, where really privacy as a narrative, I think, is going to be a huge component going forward into the next couple of months. I think it's just slowly starting to build up here. And with Alaphoria going on right now, this is one of the big airdrop campaigns and community campaigns that is essentially open now for those of you who are interested to dip your toes in, get a feeling for what Al0 is all about, see some of the ecosystem projects out there. They've got a lot of different things you can do in regards to supporting the broader protocol. Beyond that, also being able to benefit from interacting with a lot of the existing ecosystem projects that are out there. First, one of the big things is the ability to start providing liquidity on Common. This is the major automated market maker on the Al0 network. So if you guys are interested in how to actually go about doing that and join the farms, you can do that by clicking the Join as Farm link here, and you can actually go about adding liquidity, bridging it over their existing Must bridge chain, which will allow you to move from the Ethereum network over to Al0. But along with that as well, if you guys are interested in the upcoming campaigns and you want to keep up to date with what's going on with Alaphoria, then definitely check out the Alaphoria Telegram where you will get those alerts. If you were to also join the Al0 Telegram, there's a lot of great resources there. I think above all, Al0 is a really cool place to build, to be a part of. There's a whole range of ecosystem projects, grant programs, developer resources. So if you've got a big idea, definitely consider building within the Al0 ecosystem. But it's definitely above all something to keep on your radar. So check out the links down below if you guys are interested. And we're going to be having more information on Al0 as time passes. I'm thinking about doing an upcoming review, really breaking down some of the big developments from the past few months, some of the things that are coming up here in the next few months that are very exciting as the network works towards full-scale privacy. This is, again, really something that really excites me. I don't think we've really seen this in the crypto space. So Coming into a close here, guys, I wanted to go ahead and talk a little bit about equities, because while crypto markets are looking quite optimistic now, I mean, sure, there are some things we talked about. Some plays are still getting shut down at those long-term moving averages. We're having to see if the 21-day will hold. But while crypto does look a lot better than where it did back in June, on the other end of the stick, we are seeing equities starting to face some serious trouble, some serious warning signs that the market is overbought, that there's a lot of fraud, and that a lot of the profits that people are making are going to get washed out here. And essentially, what we can see here is the VanEck Semiconductor ETF, or SMH, right now is showcasing some of those warning signs itself. We've dropped from around 280 here, pretty much a double top or slight deviation, fake out, essentially 280 from the prior highs back in late June, and have broken below the 21-day with any inability to come up and test that 21-day at a minimum. So you just see direct selling, a gap down here of 7%, right? A nice solid gap down, then continuation at 7% in 1 day. No serious ability to recover, 0.5% recovery here on the next day on Thursday, and then a continuation of 3% on Friday into the close. So if you're really looking at this on like a weekly basis and you zoom out, this was one of the worst weeks we've had on record. It was even pretty much on par with the pullback we had in April of 2024. So if we're really zooming out here on the long-term trends, when you get these kind of red candles, I know a lot of people would think, oh, 9-10% dip, time to buy the dip and buy the discount. But I always say to zoom out here. We can even turn off our moving averages just for a moment, right? I'm going to turn off all the drawings as well. Right? When you get these kind of big, substantial red candles, especially after multiple weeks of green being wiped out in just one single week, this is essentially where a lot of traders get trapped. And it shoots the momentum of the market, it shoots the momentum of that trend. And what you can see is that when you get these substantial declines, it's usually indicative of a broader pullback here in the sector, or at least some stagnation for a period of time. And I think that this is telling here about how the AI narrative is getting a bit saturated. Not every major chip maker is going to have tens, if not hundreds of billions of dollars in demand for its chips. And while Nvidia, for sure, definitely could get some of its lunch eaten by some of these different participants in the market, it's getting to a point where I think that a lot of the market had anticipated that the generative AI trend and future evolutions of AI would leave us in a position where there will be such a demand for chips that it will be similar to like SaaS or like software as a service, where there's just constantly going to be that constant demand, that constant purchasing of chips. And I don't think that that's going to be the case. I think we're getting to a point here where generative AI as a trend is starting to slow down. A lot of the major tech companies, Microsoft, I would say as well, Amazon, you have a whole range of different providers, Oracle as well, are going to slowly but steadily slow down those chip purchases because there just isn't the demand for it as people were expecting. And at least what the market was starting to price in. That's the important point, right? It could remain strong here for the next 12 months, but the market might have been pricing in that this was going to be a multi-year trend and that we were going to continue to see more demand come in. It's clear that the market is shifting on that trend, and we are quite elevated here. If we just take a look at the moving averages, we are quite elevated away from that 200-day, right? It's all the way down towards those prior lows. So I think that with a broader pullback here, and Broadcom and Nvidia and AMD and a whole range of chip makers, Intel, which had a nice little bump up, I think you're going to see a broader pullback in the market. We've already started to see that. The NASDAQ had its worst week since back here in April, down about 3.6%, down below the 21-day moving average. Again, I take it to the daily. Again, just slowly but steadily fading through that 21-day, and now looking like it's ready to continue into a near free fall collapse over the next couple of weeks. It's not going to move in a straight line, but you generally get my point here. S&P 500 down nearly 2%. Again, worst week since back here in April. When you get these weekly candles, right, it's one thing to get slight 0.5% moves down for the week, where it's just a dull week or things aren't looking too good. When you get these big red candles of 2% or more on a weekly candle, that is usually your sign that you're at a minimum you're going to get another 5-10% pullback, or maybe something even bigger. So I think, again, just look at how equity prices play out over the next couple of days. I would watch for some entrance potentially at the 100-day, and a more kind of painful correction at the 200-day, which again, these are both rising as time progresses. So I don't want to come across as like some perma bear or anything, right? We made great money in equity markets and crypto markets markets. Not to mention, we have some equity plays, but a lot of those equity plays are not in the NASDAQ. They're not in the S&P 500. They're not in the Dow Jones, which again had a pretty ugly weekly candle here, fading down the majority of its breakout here, which really should have held. And it's not in the chip makers, right? We shorted Dell, which was another AI play, made some great money on that in the Dash report. We shorted Apple as well through put options, made some great returns, closed out those trades this past week. On the other hand, though, we are interested in the small caps. And while I don't like how this weekly candle closed, I'll be fair here in saying that the Russell 2000 didn't close out the way I'd like to see it. At the same time, I'm interested to see if that sector rotation continues to play out here. We talked a lot about this in the prior videos, and I know Russ has also emphasized this as well. Essentially, the huge rotation we have seen, we've essentially rotated back 6-7 months, actually, no, excuse me, more than that here, back towards the November range. So we're talking about easily 8-9 months here of losses in the Russell 2000 versus the NASDAQ being reversed. And it looks like we've got the grounds here, considering history, where this could really start to reverse quite quickly. And the Russell 2000 could really continue to move out. If it's coming up to those longer term lines of resistance that we've historically seen, it doesn't really matter where you want to draw it, they all kind of point to the same range here at 3,000. And that to me shows a lot of significant upside in a market where the NASDAQ and the S&P 500 and the Dow Jones may not really flush down and really cause a lot of panic and outflows of equities, and instead just kind of keep neutral, have those moderate 5% pullbacks. That's an environment where essentially you've got a golden opportunity for small caps, new market leaders for the next decade to start shining. And that's what we've been focusing a lot in the Dash report. We're not focused so much on NVIDIA, which is starting to showcase clear signs here, not even coming to test that 21 day after breaking and gapping down 6%. Not a good look. Not Eli Lilly, which again has been a great play for the broader part of the year, right? We are not going to be caught buying the top here after a gap down to 3.8%. Can't even get above the 21 day, another 6% follow through day down. Yikes. This is looking like we're getting clear signs of being overbought in the short term. Not saying that these can't continue to climb up over the long term, but I'd much rather buy them at discounts. And more importantly, I'm allocating large sums of my capital towards the plays that can really make those 3, 5, 10x opportunities, if not more, over the next couple of years. That I don't have to trade too much. I just accumulate DCA, build positions in the same way we did with crypto throughout 2017 up into back in 2021, right? We want to find those plays that are easy, those easy bets to make, things we don't have to think about too much, right? Because if we start over trading, we start taking on too much risk, things get messy, we make mistakes, we trip over ourselves, we're humans, we all make mistakes. It's about keeping things radically simple and honing in on those emerging narratives that are really starting to showcase significant traction. If you guys want to know about what those sectors are, you can obviously check out the Dash report down below in the description. It's a great way to support the channel, but it's our 20-page plus newsletter that we put out each month. We have the mid-month webinars. We just did one back last week. It was really great. And outside of that as well, you also get access towards our discussion group. You get access to both my trade alerts and also some alerts from Russ as well. Whole range of really interesting features that you guys will get access to. So if you guys want to check it out, it's less than $1 a day down below in the description. It's a great way to support all the free content we put out here, but also get access to some really exciting premium content to hopefully help you get an edge in the markets and be able to hopefully do well long term. But that's it for today's video, everyone. I rambled on a good amount here today. If you enjoyed this video, consider dropping a like. It's a great way to support our content here on this channel. And I'll see you guys right back here on Monday next week. Take care, everyone.